MPBOptionMillionaires.com on this May 31st, 2016. It's a Tuesday. It's after the closing bell and the market was down. S&P 500 futures down over 0.1% here. But off the lows, you can see the move, the big candle here we had to the upside late in the trading session. Talked about this 2100 level last week, the week before, many, many moons ago as a point of interest for this market. We can break and hold above it. That would be rather bullish heading into the summer right now. You can see the action. Look at this. We failed to break and hold above it. Not only that, if you look intraday, once the market figured out we weren't going to stay at that 2100 level, we collapsed. Massive collapse until late in the trading session where a buying frenzy at the end of the month got us back up to recover a lot of those losses. But if you look back to 1 year ago, where were we for the S&P 500? Yeah, right around that 2100 level. Where were we in June and July of last year? Right around that 2100 level. And that 2100 level is where the market fell off a cliff in August 2015. Well, we recovered all those losses because we got back up to 2100 in November. Could not hold it, and we started 2016 with a big pullback. Nice reversal to the upside, recovered those losses, and where did we end up? Where did the action stop? 2100. Where are we now? 2100. So that level is key for the S&P 500. Do I know which way it's going for certain? No, but I do know once it breaks and holds above 2100 to the upside, the market is going to make new all-time record highs, and if it breaks down, we're going to see a sharp correction, possibly test the February lows. It's that easy, right? Or are we just going to muddle around, straight line? I don't think that's the likeliest scenario. More than likely, I think the market is going to head up to break new all-time record highs, as in June, the ECB embarks upon their corporate bond buying spree. How great is that for everybody in this world? Fabulous. So if you look, S&P 500 futures breaking, if you draw a trend line across, breaking out to the upside. If you pull up a chart for the SPY, you can see we broke above resistance. Yeah, the market didn't like being up there, but look at this. We hit support, and as long as we hold above that level there for the SPY at 209, which we did today, you can see support. We bounced off it, I think, and if you look just in a shorter term time frame, you can see what I'm talking about here. Look at that, perfectly held that support level. We break back over 210 tomorrow, get over 2100, and the market is going to be off to the races. If you look, the NASDAQ, that head and shoulders pattern that was really playing out, well, guess what? What kind of trumps it here is a trend line support break. You can see it, a resistance, now support. You can see the support. I just flipped through there real quick. Let me just bring this back on a shorter term 5-day chart. You can see the support. We bounced off it even today. So that is really a point of interest here for the NASDAQ, the QQQ, the triple Qs, that head and shoulders pattern, somewhat negated here as we break above resistance. Also, small caps, IWM is already broken above it, and these two trend lines have been bringing up continuously. As we break above it, setting up for a move back near 120 for the small caps. The bond market continues to consolidate after breaking out to start 2016. We had a double top here. Are we going to retest it a third time and possibly break out? Again, with the ECB moving into the corporate bond market, we're going to see yields drop all over the place. So possible money continuing to flow into the bond market for the TLT would be bullish, and we're going to break out this 132.50 level would ultimately lead TLT to a new all-time record high. And if you look at stock markets, had a nice bull market. What about the last 10 years for the 20-year Treasury ETF, the TLT? Yeah, we're down at 60, more than doubled. So boring old bonds doing quite well. Couple other charts to look at. Financials, similar to the NASDAQ, where we're starting to break out here, is a 10-year monthly. Look at this pattern. If you look shorter term, we've actually broken above support, resistance, now support here. And if you look just over the last couple trading days, you can see even on today's session, broke above it. We're now above former resistance. So XLF looks good. How about XLE Energy? Energy down a little bit today, but very bullish, nice flagging pattern here. Down to 49.92, I believe, was the low. I said to start 2016 that energy ETF, the XLE, was going to break 50. It did by 8 cents. Yeah, so I'm right. But if you look above the support, broken out of this downtrend from record highs. So energy looks poised here as it consolidates to break over 70 here in the short term. A stock that I'm looking to trade here for upside in the next couple months. And we saw it last year with the financials. JP Morgan Chase broke to new all-time record highs last summer. 1 year ago, JP Morgan Chase was embarking. This is 1 year ago. We were embarking upon. We were at 62. We're $3 higher this year. Embarking upon a move to new all-time record highs. Well, look at JP Morgan Chase, just like the XLF. starting to break over that trend line resistance. You can see it, nice flagging pattern, possible breakout, but that's not the stock I'm going long. It's Goldman Sachs. Already got some calls for the break over 160, and if you look from a long-term perspective, shaping up for a possible breakout here. And you look, the nice head and shoulders breakdown pattern. We found support, looking for a break up over 160 in the next couple trading sessions. I got the 160 calls, and I'm looking out for July because I'm looking for a similar move that we saw with Goldman Sachs when it moved to almost 220 back last year. And finally, let's move to gold. Gold was up almost 0.4% today, was down to start the trading session, recovered those losses and then some. And just I'll show you the last couple trading sessions for gold. You can see today's session rocketed up as the market was pulling back late in the trading day. But if you look longer term, again, you can see that breakout from that downtrend, possibly going to come down and retest this. I talked about this real quick on Twitter this morning in the chat room at optionmillionaires.com. But overall, as long as we're above this downtrend, this is support. This looks rather bullish for a breakout for gold. Of course, there's no telling what's going to happen when the rubber meets the road here at about 112. If that indeed at all happens, the gold miners really been taking it on the chin. GDX, after hitting long-term trend line resistance, is a trend line I've had in for many, many years, goes back to 2009. And you can see we actually touched it almost to perfection. If you just look, it's amazing how well support and resistance lines work. We hit it to perfection back at the start of May and failed to break above it. That's the same kind of thing I'm looking at for the 2100 level for S&P 500 futures. Same thing though with GDX. If you can get above that 26 level, 26 and change now, it's going to really incite the buying pressure and move up to about 30 in the short term. All right, UPB, optionmillionaires.com. Yep, so the gold miners, again, a breakout here on GDX over the 26 and change level is going to bring us back to prices we haven't seen really since the middle of 2013. All right, everyone, have a great evening. UPB, optionmillionaires.com. I'll see you in the chat room. Goodbye.